Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Picc Property and Casualty Company Limited Annual Report. Picc Property and Casualty Company Limited offers a wide range of insurance products and services to cater to various needs of its customers. At the core of its business is property and casualty insurance, which includes motor vehicle, commercial property, cargo, liability, accidental injury, short-term health, agriculture, credit, surety, household property, and marine hull insurance. In addition to these primary offerings, Picc also provides reinsurance services to other insurance companies. This means that the company acts as a reinsurer, taking on some of the risks from other insurers in exchange for a premium. Furthermore, Picc offers investment and funds application services, allowing it to diversify its revenue streams. The company's services extend beyond insurance products to include agency services, where it partners with intermediaries to distribute its policies. It also provides training services to enhance the skills of its employees and agents, as well as IT services to support its operations. Moreover, Picc offers property management services, which likely involves managing properties that are insured by the company. Overall, Picc Property and Casualty Company Limited has established itself as a comprehensive insurance provider in China, offering a diverse range of products and services to meet the evolving needs of its customers. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth and decline can be identified through an analysis of various insurance sectors. On the growth side, original insurance premium income saw a significant increase in 2024 and 2025, with a notable rise in underwriting profit and other investment income. Accidental injury and health insurance experienced a substantial revenue growth of 26.3%, while commercial property insurance showed a modest increase of 5.7%. Direct sales also witnessed a considerable boost of 12.3%. In contrast, agriculture insurance saw a decline of 1.6% in revenue, while marine cargo insurance provided risk protection but did not contribute to revenue growth. Regional catastrophe insurance covered a large number of cities and people, but its impact on revenue was unclear. Some sectors showed mixed or stable performance, with motor vehicle insurance experiencing a moderate increase of 3.6%, underwriting profit growing by 53.6%, and the combined ratio decreasing by 1.5 percentage points. Overall, these findings suggest that various factors contribute to revenue growth or decline in different insurance sectors. Net income experienced a significant increase, with two separate instances noted, a $130 rise and an unspecified amount. This growth can be attributed to various factors. The improvement in profit margins is largely due to several key events. Firstly, the successful recovery of claims during the period contributed positively to profit margins. Additionally, adjustments made to risk assessments for non-financial risks had a beneficial impact. Furthermore, the recognition of certain services received, as reflected in CSM amounts, also played a role in enhancing profit margins. These factors collectively led to an overall improvement in profit margins, resulting from a combination of successful claims recovery and strategic adjustments in risk assessment and service recognition. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided information, the net cash flow from operating activities has shown a significant increase of 18.1% year-on-year, reaching RMB 43,048 million. This upward trend is further supported by the detailed breakdown on page 102, which shows that cash generated from operating activities increased to RMB 50,940 in 2025 compared to RMB 41,025 in 2024. These figures collectively demonstrate a positive operating cash flow for the company. The company's debt level has experienced a significant increase over the past period. According to the extracted summaries, the total debt has risen by 10.6% and 10.8%, respectively, from RMB 517,622 to RMB 571,795, and from $515,595 to $569,333. This substantial growth in liabilities suggests that the company's financial obligations have become more burdensome. However, there is no direct information provided on whether this increase has led to a corresponding rise in interest expenses. The summaries mention changes in bond investments and long-term debt investment schemes, but these do not explicitly indicate an increase or decrease in interest expenses. As such, it remains unclear how the company's increased debt level will impact its financial obligations in terms of interest payments. Management is optimistic about the company's future prospects, citing a significant 25.5% increase in net profit for the year compared to the previous year. This positive outlook is underpinned by a strategic focus on capacity building and innovation, which will enable the company to accelerate the construction of an insurance protection system. The company's strategy involves several key initiatives, including building a globally leading property and casualty insurance company, implementing digital transformation and leveraging artificial intelligence, and strengthening professional operations. Additionally, management is prioritizing green finance, actively developing green insurance and responsible investment to promote sustainable development. To support these strategic objectives, the company will continue to emphasize governance and risk management, transparency, and disclosure in financial reporting. A comprehensive digital development action plan has also been approved, which will drive innovation and growth. Overall, management's vision for the company is one of sustained growth, innovation, and responsible business practices. By focusing on these key areas, the company aims to build a strong foundation for long-term success. The company's financial reports clearly indicate that it has paid dividends. On page 23, it is stated that the company received $138 million from Huazia Bank as dividend payments. Furthermore, on page 40, it is mentioned that a final dividend of RMB 0.44 per share was paid for the year ended December 31, 2025. The payment of dividends is also confirmed in other sections of the report. On page 103, it is noted that $12,723 was received as dividends in 2025. Similarly, on page 111 and page 271, it is stated that the company has paid dividends. Additionally, on page 211, it is mentioned that dividends were received by the company. In conclusion, the evidence from various sections of the report confirms that the company has indeed paid dividends. That concludes the financial summary for Picc Property and Casualty Company Limited. Feel free to comment below, and I will be happy to answer them when possible.